Hey there, Ken Zorvich, NFM Lending. Hope you're having an excellent start to the weekend. So let's talk a little bit about what's going on in the market right now because there's a lot of volatility. Interest rates are rising in the mortgage industry. We still have this conflict with Iran going on. What is sparking all of this? All right. So nothing new, really. Interest rates have kind of been going up at a slow but steady pace since the Iran conflict started, and mainly it has to do with oil. So all the gas prices that everyone is complaining about, what we don't always remember or seem to not realize sometimes is the one part of our economy that affects everybody is energy. So as energy prices go up, it just causes a an increase all over the place. Now, why would that affect mortgage rates? Well, that's more of a domino effect. So, energy prices go up, which means inflation can rise. And if inflation rises, that means the bond market is less valuable and the bond market will sell off. And when the bond market sells off, mortgage rates rise. All right. So, we got inflation readings this week that came in hotter than expected. And it was all attributed to the oil prices and energy prices making that inflation reading higher. So it's kind of like the market has been sort of accepting of where the energy prices are because they feel like this is going to be short term. But I think they were building up to wait and see what would happen when Trump went to China for this meeting with President Xi. And when they came out of the meeting and the Iran conflict was not finalized, the markets had had enough today and they just decided that's it. Sell off, sell off, sell off. And so we're feeling the impact of it. Now, that all sounds bad or scary or, depressing, but here's what the good news is. As quickly as this changed, it can quickly go back the other way. However, that has to happen very soon here because if they can get the conflict resolved here in, say, the next couple weeks, we have a chance for a lot of this to stabilize. If not, if this conflict extends on, we get to the point where oil production is going to be impacted so much around the globe that these oil prices will stay spiked and the oil availability is even going to be an issue. And that's the problem. That's the problem. So if we can get this resolved quickly, this could be sort of a blip on the radar. If it goes beyond too much longer, we're going to feel the impact for a bit. So if you have any questions on this, you want to talk about what these impacts make and how this is going to happen with our economy, please feel free to reach out. Make sure you get in some time with some friends and family this weekend. And as always, I'd love to be in this business in 5 years. You know someone looking to purchase or refinance, please think of me. Have a great weekend.